Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Empire Fintech Conference, New York City. Joining us for this segment, we have Shevlin, Chief Research Officer at Cornerstone Advisors, to discuss what's really happening with embedded finance. Ron, it's great to have you with us. Welcome to TradeTalks.
Thanks.
After a couple of years of hype around embedded finance, some industry observers are cooling off a bit. We certainly have seen that. What's really happening with embedded finance?
It's hitting a speed bump from a couple of different angles. One is the regulatory aspect. The regulators are getting more involved, prying into these relationships because they want to be sure that there's strong compliance, regulatory risk management. So there's been some negative stories in this space. So that's creating a bit of a speed bump. Plus the general downturn in the fintech market is putting some brakes on the market. So I think it's just a speed bump because there's still plenty of strong demand for the future in the space.
Let's talk about banking as a service, right? We know what SaaS is, we know what some of the other as a services are. Explain to us what banking as a service is and which banks are going to emerge as winners.
Sure. If embedded finance is the provisioning of financial services by financial institutions through non-financial institutions, then banking as a service is the set of services that a bank serves or applies to its partners, whether it's a fintech or it could be a non-fintech, it could be a non-financial brand. But banking as a service is the services that the bank provides their partners. And historically, it's been the smaller banks that have been in this space because of the interchange advantage that they have. But when you look to the future, that's going to change a lot. A lot of the larger institutions are getting into the space. I think JP Chase has actually recently hired a head of banking, bank BaaS services because they want to get more into the lending space. You're also going to see banks like Synovus down in the Georgia area, who is focusing their unit called MAST, Money as a Service, which isn't actually a great term. Sorry, Synovus.
Right.
But what I like about them and where I think the opportunity is they're focusing on the B2B side, the commercial banking opportunities and commercial lending opportunities through vertical market SaaS providers. So whereas historically the focus has been a lot on the smaller institutions, I think the winners that are going to emerge over the next couple of years are the larger, even the mega banks like Chase and Bank of America, but especially the larger regionals who have a strong presence in the commercial banking space.
For the consumer, what does that mean for us? When I think of banking as a service, where would I use that?
For the consumer, the perspective, the benefit is really about convenience and reducing friction. If we want to buy a car today, we got to go to a dealer and then we got to go get insurance somewhere. If you buy a house, you got to go through a bank. You generally get through the realtor, then you got to get a bank, you got to get a mortgage, then you got to get insurance, you got to do all those things. The benefit of embedded finance is dealing with one provider. And these are just really some of the broader examples, but there's a lot of players who are looking to provide a broader set of financial services that integrates with what they do. So imagine you want to do some home improvement. You go to Home Depot to buy all the stuff that you need. What if you need a home equity loan? Well, why not get it directly from Home Depot? You can't do that today because they don't offer these things, but through a embedded finance or banking as a service relationship, they can do it. There's also a lot of brands who are looking at this as an opportunity to deepen their relationship with their customers. Give you an example, I don't know that they're actually doing this, but if you were a new parent, you know, there's a lot of different baby formula out there, baby food. But if Gerber offered you a savings account or a 529 plan and offered you discounts on the products, that might get you to buy more from them and become a stronger client, develop loyalty. So there's a friction aspect to it from a consumer perspective, but there's also a deals, benefit, lower cost, getting everything in one place aspect.
It sort of sounds like maybe a mini super app, if you will, where you have all these different technologies and products available on one platform. Is that how you would think of it?
Well, you kind of opened a can of worms there with the Superwrap, because if you think about what a Superwrap has been like in Asia where they became popular, this is nothing anywhere close. But it is a multi-product, multi-provider offering where the product offerings are bundled that makes sense between a non-financial product and a financial product. So it could be things like bundling insurance or a loan with a big purchase, but it could be just bundling regular banking services or more often payment services.
Right.
So for example, if you were a gamer doing a lot of in-game payments, it'd be nice to have a Xbox payment account in order to do that instead of having to hook up something else. So it's a convenience aspect, but it's really a bundling of products that are often not all financial or not all non-financial.
All right, Ron, appreciate the insight. Thanks for joining us on
Thanks
Trade
a lot.
Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.